Hey everybody, today I'm going to talk about Greece and the euro. By the way, how do you like my new studio? But before I get into that, I want to remind everyone who hasn't already taken my online Forex trading course, or if you haven't bought the videos for that course, that I am once again putting those videos on sale for the unbelievably low price of $250. That's right, for $250. You get my full 30 hours of the Forex trading course. Now, remember, this is my proprietary system. It's what I call market composition plus MMT plus mental game. And it's an approach that I've developed after 35 years as a trader. You know, I traded on 4 exchanges, the CME, the NYMEX, the COMEX, and the New York Futures Exchange. It's also the only applied MMT course you're going to find anywhere. You know, there's a lot of theory and academic stuff out there on MMT. You know, we all know that, but who teaches you how to use MMT to successfully trade? Okay, I do. Now, I went 2 years and executed hundreds upon hundreds of trades in the currency markets without a single losing trade following this system. So it's a very good system. It's been well tested, and there's been plenty of students who've taken it who are doing very well. So if you don't have the time, if you haven't had the time to attend my live course, here's a chance you could learn at home at your own pace and your own convenience. Plus, it's a really, really low price. Now, if you want to get the videos, you simply go to www.pitbulleconomics.com and you can get them there. And I think everyone should be trading Forex. That's how I feel, seriously. Okay, that's all I'm going to say about that. So let me get into the Greece situation. Now, a lot of people have been asking me about the Greece situation recently and about the euro and what I think is going to happen there. All right. So, and I think I said, you know, going way back to the election of the Syriza party in January, and even I think I was talking about it before that, I was saying that as long as Greece sticks with the euro, which it looks like that's what they want to do, they really have very few options except for growth. And growth is really impossible now because Germany is making that impossible by running big current account surpluses. And, you know, at the same time, I don't see anything coming out of Greece that says they're going to go back to the drachma. It's really kind of curious when you think about it. Even the Greek people, they don't want to go back to the drachma. Now, they hate austerity, understandably, and they want to end that. But they don't seem to see the link between austerity and their debt and the euro. And if you don't issue your own currency, you really have very few options, like I said. So in the end, I think we're going to continue to go through these crises over and over and over again. You know, people wondering, will they pay? Will they default? Will they leave the Eurozone? Will they reissue the drachma? And then right at the end, there's going to be some kind of an agreement. And this is just going to continue to go on and on until they realize, if they do, that the problem is the euro. They really have no choice unless they realize that. Okay, now speaking of the euro, what do I see happening there? Because that's a whole separate discussion. Now, since demand in the Eurozone has been effectively crushed by austerity, and it's going to remain crushed, really the only place where you don't see that happening is in Germany, export growth is the only way that they can grow. And again, it really pertains to Germany. Now, the euro is falling. By the way, it's not getting harder to get, okay? The euro is not getting harder to get. That's wrong. The euro is falling because primarily large firms, export firms in Germany and elsewhere, they're setting prices lower to sustain sales and market share. And so they have effectively become the price setters in the currency. And when they do that, when they cut prices to maintain market share and sales, that's essentially an exchange rate adjustment in the euro down. And this is going to keep happening unless we see some big new source of demand emerge. But the question is, where's that going to come from? The United States? I don't think so. Government spending here is slowing down now. And, you know, we're still under the debt ceiling and the constraint of the debt ceiling, and you have Republicans in Congress now with their proposed budget. They want to cut even more, except for defense, of course, which they always want to increase. So where's it going to come from? Japan? I don't think so. Same problem in Japan. They want to grow with exports, and most Japanese firms compete with German firms for the same export markets. What about China? Same story there. They want to export too. So, I mean, the euro, in my opinion, has no place to go but down. It's going to take some time because the worries over Greece will create a lot of volatility, you know. But in the end, I think you really have to sell rallies in the euro, and I think it's going to go down to parity against the dollar and even below. I don't see any reason why it wouldn't go down to where it was in 2001. I think it got down to 80 cents against the dollar eventually. Anyway, so you asked me what I thought. That's what I think, okay? And so think about it. Leave the comments here. That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.